So in the first part of exercise 229, you're asked to prepare journal entries to record the write-off of 2 account receivable balances. So one write-off on August 10th, one on September 12th, and then on October 10th, there's a recovery of a bad debt. So you will record the reversal of the original write-off and then record the receipt of cash. So the harder part comes in part B. That's where you're asked to prepare the adjusting entry as of the end of 2017. And it's helpful when you're asked to prepare an adjusting entry to adjust the allowance account to prepare a T account analysis of what's been going on in that account. So over here to the right, you'll see that I've written, to start with, the beginning balance in the allowance account as of January 1st, 2017. And that is actually the same as the ending balance in the allowance account as of December 31st, 2016. We're actually given that amount over here in this 12/31/2016 column. It tells us that the balance in the allowance account was $4,000. It doesn't say that it's a credit balance, but we can go ahead and assume that, because since the allowance account is a contra asset account, it's normally going to have a credit balance. So I've gone ahead and written that credit balance over here on the credit side. So then we have these journal entries that occurred during 2017, and I went ahead and posted all of the amounts that impacted the allowance account. So we had a $900 debit on August 10th when we wrote off the first bad accounts receivable. Then we wrote off another $3,000 accounts receivable, and that was another debit to the allowance account. Finally, when we had the bad debt recovery, we put $300 back into the allowance account. So I'm showing that $300 credit here for the bad debt recovery. And so these were all the journal entries that impacted my allowance for doubtful accounts during 2017, and of course carrying forward the ending credit balance from December 31st, 2016. So before we figure out our adjusting entry, let's see what our ending balance is right now in the allowance account. We have $4,300 in total credits, $3,900 in total debits, and the difference between $4,300 and $3,900 is $400. So that $400 is going to be our ending credit balance. The reason it's an ending credit balance is because the credits are bigger than the debits. So we'll remember that. We'll remember that we have a $400 ending credit balance right now. So now let's take a look at what we want the ending credit balance to be in the allowance account. So going back up here to our data, we see that the balance of total accounts receivable as of the end of 2017 is $100,000. And in our company, past experience indicates that 6% of accounts receivable will eventually be uncollectible. Therefore, 6% of 100,000 total accounts receivable, that equals $6,000 in estimated future uncollectible accounts. So that's what we want our allowance account balance to be. We want it to have a credit balance of $6,000. So what do we need to do to get it there? Remember, I said earlier that currently it has a $400 credit balance. We want it to have a $6,000 credit balance. Therefore, we need to add $5,600 more to the allowance account through our adjusting entry. So looking down here in Part B, we see our adjusting entry that we'll make at the end of 2017, debiting bad debt expense, like we always do in our adjusting entry, and crediting allowance for doubtful accounts. So that $5,600 that we're adding to our allowance account is going to bring it to the $6,000 balance that we want. And again, remember, the $6,000 balance represents our best estimate of future bad debts. So the last question asks, what is the balance of the allowance for doubtful accounts as of December 31st, 2017? So this one's easy now that we understand how this all works. After we post this adjusting entry, our balance will be $6,000. And that's exactly where we want it to be, because $6,000 represents our estimate of future uncollectible accounts.